Welcome to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. Over the next half an hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show, the world's deadliest earthquake in the past 25 years has killed thousands, and the death toll is expected to rise. The world has rallied by sending search and rescue efforts, but freezing temperatures have hampered attempts. Shortly, we'll be hearing from Yahya Tamrikulu, a program development coordinator at the aid agency Islamic Help, for an update on what's happening on the ground. And Kai Neufeld, the head of forecasting and thought leadership at the Centre for Economics and Business Research, will be joining me here in the studio for an outlook on the British economy following that stark assessment from the International Monetary Fund. Then later, I'll be speaking with the CEO of the Botswana Stock Exchange, Thapelo Tiole, about the successes and potential headwinds for the African stock market. But first, let's start the show with a story that continues to make headlines here in the UK and across the world. The British government has announced further support to Turkey and Syria following the devastating earthquakes that have killed thousands of people. The UK will provide vital items such as tents and blankets to help survivors cope with the freezing conditions as part of its immediate response to the crisis. The equipment being urgently deployed from the UK stockpile will meet the needs of up to 15,000 people. The government is also providing a world-class team of UK medics and surgical capabilities and equipment to provide vital emergency treatment. Yahya Tamrikulu, a program development coordinator at the aid agency Islamic Help, spoke to Channel's Business Global from the epicenter with an update on the frantic search and rescue mission, which is still ongoing.
We are here from the first day of the earthquake. As you said, we are in the epicenter city of Kahramanmaraş. And first of all, it was very difficult to reach the area because the roads were not good. Some of the roads are destroyed, tunnels are destroyed. And since it affected 9 cities, the roads are very crowded at the same time. And the weather was snowy. And normally it takes 10 hours to reach this area from the western side of Turkey. We came from Istanbul, by the way, but it took 24 hours to reach there. And when we reached the area, the epicenter, we shocked what we saw. Many people's in the streets waiting for urgent appeal, and the teams are on the ground. They are not sufficient because there are in the one street you can see more than 5-6 buildings have been collapsed, and no one started for search and rescue operations, and people are screaming under the rubbish. But now this is almost 60 hours left, and many teams are on the ground, including international organizations. And now the situation is a little bit better regarding search and rescue operations. But people still not leaving from the collapsed building. They are still waiting for good news with hope, and we are trying to do our best for them, as also other aid organizations, all of the people working hard here. Hopefully the situation will be better in next days.
Now to our next topic. Prime Minister Rishi Sunak has laid the groundwork for Britain to send fighter jets to Ukraine following an impassioned plea from Volodymyr Zelensky during his surprise trip to the country on Wednesday, where he addressed British lawmakers in Westminster Hall and met King Charles III in Buckingham Palace. The new willingness to consider UK planes for the battles against Vladimir Putin's fighters is a marked change from the recent mood music of hesitancy.
So when it comes to fighter combat aircraft, of course, they are part of the conversation. Indeed, we've been discussing that today and have been previously, and that's why we've announced today that we will be training Ukrainian Air Force on NATO standard platforms. Because the first step in being able to provide advanced aircrafts is to have soldiers or aviators that are capable of using them. That is a process that takes some time. We've started that process today. That's because we're keen to support the President and his country in delivering a victory, and nothing is off the table, and our leadership on this issue is something that we all collectively should be very proud of, and I know that the President is grateful for.
Well, let's remain with British news, but pivot slightly to focus on the economy. In its latest forecast, the International Monetary Fund said the UK economy will have its worst performance of all G7 economies this year, even sinking below Russia.
Well, the fact that we have avoided recession, in fact, we're the fastest growing major country last year, shows there is underlying resilience in the UK economy. But we are not out of the woods. Inflation is still much too high. That is causing pain for families up and down the country, which is why we need to stick to our plan to halve inflation. If we do that and play to our strengths in science and technology, we really can be one of the most prosperous countries in Europe.
Why? Well, that's what I attempted to find out from Kai Neufeld, the head of forecasting and thought leadership at the Centre for Economics and Business Research. Kai Neufeld, it's a pleasure to have you in the Channel's Business Global studio. I suppose we should start with the labour market because all of the key indicators suggest that's where we're facing the most problems here in the United Kingdom. Unemployment still does remain internationally and historically low. However, we are having issues with long COVID. And of course, there are so many problems in the NHS. People are not getting the treatment, not getting back to work, causing more strain on colleagues that are already fatigued, which is why we're seeing so much industrial action. Do you believe this is what's pushing Britain into a recession?
I think that's certainly a key factor, yes. So the UK is one of the only developed nations that after COVID still have a labour force that is smaller than pre-COVID. So the employment rate is 1 percentage point lower still. It's about 300,000 people that have not returned to the workforce compared to pre-COVID levels. And as you said, this is adding pressures to the economy, to the workers who are in employment. It's putting pressures on wages, which means the Bank of England needs to react quite forcefully, as it has done by raising interest rates. And kind of the combined effects of the tightening in interest rates and monetary policy and international economic headwinds are causing the UK economy to slow down.
If we look at interest rates, barely over a year ago, we were at historic lows of like 0.1%. We're now at 4%. What impact is this having on those who have large loans, like, those who are on mortgages and are struggling? Because, of course, they're not just seeing their mortgage payment rise month on month after 10 consecutive interest rate hikes. They're also struggling with their energy bills.
Yeah, certainly. This is adding to the cost of living crisis that we're seeing at the moment in the UK. Interest rates have, as you mentioned, risen considerably over the past 18 months. And the UK is, again, particularly exposed because a large share of the mortgage holders in the UK have mortgages that have short durations, 2 to 5 years predominantly. And that means we have around 200,000 households every quarter who roll off their old mortgages and have to refix their mortgages at now significantly elevated rates. And this is going to play out through the entirety of 2023 still, and significantly reduce disposable incomes. And as you mentioned, this is coming on top of higher bills, higher costs for food, energy, and the rest.
A lot of the outlooks we've had, particularly from the most influential economic institutions like the IMF, have been all doom and gloom. We had a response from the Chancellor, Jeremy Hunt, saying, hold your horses here. Things aren't great, but we are doing significantly well in other areas. Like, for example, last year, Britain becoming, I believe it was the third nation in the world to be $1 trillion tech hub. Do you think we should be a little bit more cautious about how this data is being forecast, particularly as we know some data can be quite distorting, can't it?
Yeah, that is true, certainly. And especially the IMF forecast came out, I think, at a point where a lot of research institutes have actually revised up their growth forecast for the UK economy, as have we at the CEBR. We still predict a recession, but a milder one than we predicted 3 months ago, predominantly due to lower gas prices that we're seeing at the moment. And on the tech sector, certainly, this is one of the strong points of the UK economy. We have looked extensively into the role that tech plays in the UK economy. If you take tech-enabled sectors of the UK economic activity. It's a larger share than manufacturing actually now. But again, you have to look at what enabled that actually, and it's been a mix between the access to deep capital markets that we have in the UK. We have had in the past 15 years, accessible, affordable, living space still, attracting international talent, local knowledge spillovers, creative media types that also came to London, to other cities in the UK. And you have to ask, are these conditions still there? And with the cost of living crisis, with the lack of affordable housing, it's more difficult to see that continuing to flourish, and the government needs to step in and do something there.
The government do need to step in. I think where the most pressure is coming from has got to be this industrial action. The wave of the winter of discontent continues into the new year, continues into the month of February, and it doesn't appear as if there is any end in sight. Do you think the government are just going to have to once and for all negotiate with these workers?
It's a difficult situation, certainly, and I think, in my opinion, what the government is trying to do is just wait out until inflation continues to fall.
Can they afford to do that?
That is a big question, and I don't want to kind of take a side here, but I think this is probably how it's going to play out. But again, if you compare the UK internationally to other countries, which also suffer from high inflation, but you don't see that widespread labour action, these widespread labour disputes. And I think it's because a lot of public sector workers, care workers, nurses in the NHS have lived through these shocks of COVID, of the cost of living crisis, and are really at a breaking point. And that's a systemic issue that's going to remain an issue that's going to be relevant longer than this year. And I think we will need more nurses, we will need more ambulance workers, care workers in the future. So there needs to be a sustainable agreement in place. Yeah,
there was that £1 billion investment fund, I think, that the Prime Minister announced last week. We'll just have to wait and see whether it yields any dividends. Before I let you go, Kai, what do you think are going to be some of the headwinds for this year? Do you think we will slip into the recession, as previously the Bank of England Governor Andrew Bailey forecast?
That's still our central scenario, yes, that we will have a recession of about 1% decline in economic activity over the whole of the year. The main factor remains the pressures on households' disposable incomes. The ONS has said we're facing the biggest decline in household disposable income since the 1970s. Real wages are falling, inflation is coming down, but only very slowly and from very high, very elevated levels. And the UK economy is very much reliant on consumer spending. And as we also spoke about, the pressures on mortgage holders and the housing sector. So this is all coming together, and I think that's going to have a big effect on consumer spending this year, and this will be sufficient to tip the UK into recession.
Absolutely. After the break as well, we speak to one pensioner who, of course, is struggling with the cost of living. We've been following that extensively on this programme. But for now, Kai Neufeld, Head of Forecasting and Thought Leadership at the Centre for Economics and Business Research. Thank you so much for your time today.
Thank you for having me.
New research has found that people dependent on the UK state pension only just break even amid the rising cost of living. This is despite an increase in the autumn budget. Pension advisors Ormond Financial analysed the average cost of general living expenses such as food, shopping, the price of a meal at a restaurant and energy bills to discover an estimated cost of living per month excluding rent. Their research suggests that British pensioners are struggling more than those living in mainland Europe. Earlier this week, I was invited into the home of one pensioner living in Tottenham, north of London, whose spending power has decreased dramatically over the past few months. Margaret, thank you so much for inviting us into your lovely family home. Talk to me about how long you've been in the United Kingdom, what your life has been like here, and how it's changed as the cost of living crisis has increased.
Well, I came over to United Kingdom in 1968 to join my husband, I came on April the 15th, 1968. In August 14, we got married here then. And we used to live in Battersea, southwest London at the time. When I came, my husband was a student, and to make ends meet, I have to work, because he was a full-time student. So I started to work with the Church of England in Waterloo. I worked there because I was trained as a secretary from Nigeria. I did my shorthand English typewriting in Nigeria. So I started to work with the Church of England. I was there for about 3 months. Then I got a job with the Ministry of Trade and Industry. During that time, life was a bit easier in England then. Life was very, very easy, because as I told you, working with the government, the security was so good. You are entitled to a lot of things, So I really enjoy my work, and I enjoy the people I work with. Luckily, I'm very sorry to mention it, people are not so particular, being that I'm an African and in charge of a pool. All the people I was working for were so good to me, very friendly.
So from when you retired 20 years ago to 2023 now, what is it like being a pensioner? Honestly.
Well, it's not easy financially, because when I was working, I was on full pay salary. But luckily for me, I was entitled to a lot of benefits, which really helps, And as I said, life was a bit easier for me with the 3 children because I was supported by the government, Department of Pension, they gave me good pension, which really helped me with the 2 children. So it made life easy for me to be able to to bring up the 3 children.
What's different now, Ma?
Oh, it's everywhere. My gas bill has gone up nearly 10 times what I used to pay. Before I used to pay, I think about £25. Now I pay nearly £300, through £275 something. I can show you on my bill for my gas, Electricity, I have key, which I'm used to from the beginning. I continue to do that. Though they support me during the winter months when it's very, very cold, they will give me some, some amount to support, which I really appreciate and which really helps me a lot. And what other bill? The water rate is there. The water rate I used to pay about £15 before. Now I pay 105.
What about food, Ma?
Food. Oil. I use sunflower oil. Sorry to mention that. How much? Because my daughter, they do my shopping for me now anyway. How much do I use to buy that big? It's about 10 times the price of oil, sunflower oil. So expensive.
What message or words of wisdom would you give to the millions of viewers that will be watching you, who are thinking that they just want to give up Nigeria, they've had enough, that they want to come to Britain? Would you say that Britain is the right place for them at the moment? What would be your advice, Ma?
When I came, I was happy because things were easy then. But now it's not the same. I will not, to me, even advise any of my people. One of my in-law was, she called me day before yesterday that she's trying, I think this thing you mentioned, that she had some people have been allowed to come and work here, this and that. And I said, well, look, I don't know anything about it. And I will not even advise you to let any of your child or your son come here now. Life in this country is not easy at all.
Well, before we go, let's turn our attention to the African stock market. Over the past decade, it has seen significant development driven by factors such as increasing economic stability, a growing middle class, and increased foreign investment. The African stock market is projected to reach $1.3 trillion by 2030, but a lack of diversity and liquidity could hamper accelerated growth. Well, for more on this, I'm now being joined by Thapelo Tiole, the Chief Executive Officer of the Botswana Stock Exchange. Thapelo joins me from the Botswana capital, Gaborone. Thapelo Tiole, thank you so much for taking out time from your busy schedule to join me on Channel's Business Global. And congratulations, you've got this new role as strategic advisor and reviewer for the UN pathways. Can you talk to me a little bit about what your duties are going to entail and what you want to achieve this year?
Yeah, I think I'll actually be an advisor to the UN pathways in terms of sustainable finance. It's a British-based organization, and therefore it's a voluntary position, which I'm going to be taking part in advising them on issues surrounding emerging markets, especially Africa, concerning sustainable finance.
Yes, we know that sustainable.
And
please continue.
Yes, and then I think most of the things that we are targeting at is, we want to deal with issues that affect sustainability in the finance industry, and therefore I'll be offering my expertise in that regard.
Oh, brilliant. I would like to hear some of your expertise on the African stock market, which has been doing pretty well over the past decade, particularly in Nigeria and, of course, in the southern part of the continent. I suppose some of the headwinds that economists have forecast is a lack of diversity and a lack of liquidity, particularly when it pertains to Nigeria. Obviously, in Botswana, we know the vast majority of firms on your stock market are in diamonds. Are you seeing any investment or any interest into a knowledge-based sector rather than a commodities-based sector? And, of course, sustainable development too.
Yeah, I think there are a lot of investments coming into sustainability. You will realize that in the southern region, we just launched a green bond program last year that covers about 14 countries, where we are going to be capacitating a lot of countries, including Botswana. And therefore, we are going to be upscaling our activities in this regard. And also, I think in terms of innovation, a lot of African markets are now starting to realize that it's good to work together as stock exchanges to interlink. There's a project currently taking place to interlink stock markets in Africa so that somebody in Nigeria can buy shares in Botswana without necessarily having to call Botswana, but by using a Nigerian broker. The same thing will apply to Botswana. So these are some of the innovations or innovative ways in which African markets are trying to increase liquidity.
Yeah, well, foreign-based firms, or those who understand the complexities or can navigate them, will be fine. But what about local firms who struggle with bureaucracy? Are you trying to make it easier for indigenous companies to trade on your lucrative stock market?
Yes, I think it's going to be far much more even for the local indigenous companies based in respective countries. Because if this project becomes successful, we launched it as African markets in December 2022. It basically means that if you are a company in Botswana and you want to be buying Dangote shares or you want to be buying Safaricom shares in Kenya, you don't necessarily have to be doing research in terms of going to those particular markets. You just use a local broker in your area of jurisdiction, and then you place an order to buy shares. So these are some of the things that generally a stock market, including Botswana, we are part of this great development initiative.
It's always nice to hear a positive economic forecast for the African continent, given the global recession. Well, we are coming out of it. We hope we're coming out of it, but it's always great to end on a positive note. Thapelo Tiole, Chief Executive Officer at the Botswana Stock Exchange and Strategic Advisor for UN Pathways. Thank you so much for your time today.
Thank you so much.
Well, sadly, that's all we have time for today. But as always, do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channel's Business Global. Goodbye.